So, I mean, obviously, if the dollar starts weakening more broadly, the euro will participate in it, and a lot of other currencies with it. But I think that the one place where we have seen a huge lag, and it could catch up a little bit more vividly, is the Chinese yuan.
Right.
I think that it has lagged for policy-related reasons as opposed to broad market drivers. It's a very cyclical currency.
Will the Chinese let it rally against
I
the dollar?
think that more often than not, you see that cyclical considerations overwhelm. So to me, the main question is, what is the point that Chinese yields are going to be going higher that trigger the kind of shift of funds domestically in China from dollars, which are widely held in the banking system, into CNY. And that is the point that the Chinese policymakers don't see a huge reason to resist it.
I think China on the currency front is very difficult to analyse just because it's so government controlled and they manipulate the rate. Let's ask you about the yen here, because to a certain extent there is some manipulation there as well. But the market is reassessing the outlook for Japan, I think, at this point. We've got a new central bank governor. And I also think it's important that Warren Buffett has gone very positive on Japanese stocks. So what do you think in the round that tells us about where the yen is going?
So in that broader recovery to fair value, I think the yen has also lagged. A big part of the reason is because still the market is trying to negotiate the peak in global yields. And because the Bank of Japan, it's going to take its time in this environment to adjust. But I think a level closer to 120 in the medium term is a lot more reasonable than the mid-130s, basically, right? And I think that both the normalization of yield curve control that will tie the yen closer to equity markets than bond markets, and the fact that, very high US rates, what I consider to be very high US rates, will reverse.
Sorry, does normalisation of yield curve control mean no controls?
Yes.
If so, are we off to the races, or actually will there still be vast purchases of Japanese debt by Japanese authorities? Because it's not exactly how can I put it, a free-float liquid market at the moment, is it?
No, I think it's the opposite. I think that if you look at the yield curve, particularly in Japan, there's a huge distortion there, which makes it quite clear that that needs to go, that yield curve control needs to go. And there's a big debate within Japan as well. What is the easiest way of doing it? Do we do it gradually? Or if we do it gradually, do we invite more purchases, purchase upon purchases? So, we tend to think that they will try to find the right timing, but just take it off completely, basically, right?